Imagine a bustling marketplace, not for fresh produce or handmade crafts, but for pieces of companies. This is the stock market. It's a place where fortunes are made and lost every day. The stock market isn't just for the wealthy, it's a place where anyone can invest and grow their money. Whether you're saving for retirement or your child's education, the stock market can help you reach your financial goals. But what exactly is the stock market? It's a collection of markets where stocks, pieces of ownership in companies, are bought and sold. Companies list their stocks on exchanges like the New York Stock Exchange, NYSE, or NASDAQ, and investors trade these stocks, hoping to profit from their investments. By mastering the stock market, you can make informed decisions that could lead to financial independence and security. Knowing how the stock market works is essential for anyone who wants to invest. Without this knowledge, you might find yourself lost in a sea of financial jargon and risky investments. Understanding the stock market can help you make smart decisions and avoid common pitfalls. Historical data shows that over the long term, the stock market tends to grow. This means that even if prices drop in the short term, they usually recover and rise over time. But it's not just about making money. Knowing how the stock market works also helps you understand the economy. When companies do well, their stock prices go up. Conversely, when stock prices fall, it might signal economic trouble. This knowledge empowers you to make decisions that align with your financial goals and risk tolerance. Let's break down the stock market step by step. First, companies decide to go public. This means they offer shares of their company to the public through an initial public offering, IPO. Once the IPO is complete, these shares are traded on stock exchanges. Investors buy and sell shares through brokers. These brokers act as middlemen between buyers and sellers. When you want to buy a stock, your broker finds someone willing to sell that stock at a price you're willing to pay. The stock market operates on supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell a stock than buy it, the price goes down. This constant buying and selling creates the stock market's daily fluctuations. Section 4, Basic Terms: Stocks, Shares, and Dividends. Stocks represent ownership in a company. When you buy a stock, you buy a piece of that company. This piece is called a share. So, if you own a share of Apple, you own a tiny part of Apple. The value of your share goes up or down based on how well the company performs. Shares are the units of ownership in a company. Companies issue shares to raise money for various needs like expanding their business or launching new products. When you buy shares, you become a shareholder. Dividends are payments made by a company to its shareholders. Not all companies pay dividends, but those that do usually distribute a portion of their profits to shareholders regularly. Understanding these basic terms is crucial for navigating the stock market. Section 5. Risks and rewards of investing. Investing in the stock market comes with both risks and rewards. On the reward side, the stock market has the potential to offer substantial returns. Historically, stocks have outperformed other types of investments like bonds or savings accounts over the long term. However, investing in stocks also carries risks. Stock prices can be volatile, meaning they can rise and fall quickly. This volatility can be due to various factors, including economic changes, company performance, and global events. One of the biggest risks is losing money. If a company's stock price falls, the value of your investment decreases. Despite the risks, investing in the stock market can be rewarding. The key is to understand the risks and manage them effectively, making informed decisions based on your financial goals and risk tolerance. Section 6. Practical tips for beginners. For those new to the stock market, here are some practical tips to get started. First, set clear financial goals. Knowing what you want to achieve will guide your investment decisions. Are you saving for retirement, a home, or your child's education? Your goals will determine your investment strategy. Next, start with the basics. Invest in what you know. If you're familiar with a particular industry or company, start there. Don't invest in something you don't understand. As you gain confidence, you can diversify your investments into other areas. It's also important to do your research. Read up on the companies you're interested in. Use tools like financial news websites, stock analysis platforms, and investment apps to stay informed. Consistency and patience are key to successful investing. Section 7. Conclusion and encouragement for new investors. Starting your journey in the stock market can be intimidating, but remember, every expert was once a beginner. With the right knowledge and a solid plan, you can navigate the stock market with confidence. Take it one step at a time and don't be afraid to seek advice from trusted sources. The stock market offers a world of opportunities. Embrace the risks and rewards, and use practical tips to guide your investments. Happy investing!